Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is 100% profitable group. We are a multinational hedge fund who operates in US equities, US indices, European equities, European indices, Asian equities, currencies, and commodities. And we are 100% profitable, thanks to God. But, like I repeated many times, our fund is a prop fund. By prop, I mean no third party, whether you are a venture capitalist, you are a private equity, or you are any other fund, you can invest in our hedge fund. Our strategies are prop, which means we never share in the public. Yes, on time to time basis, we upload the educational videos free of cost for the people, but we don't share our strategies because we are a prop fund. Effective 2018, I am raising my voice against a concept called hype. India is a country of hype where unnecessarily hype is provided to the stocks, and unfortunately investors enter in this hype and lost. Example, 2 months ago media gave hype to Happiest Mind, Infosys, Hindalco, Info Edge, Paytm, many such stocks. A bit correction, I always term this at bit correction, and majority of these stocks are coming down. As we speak, Hindalco is near about 400. Yes, it is the same stock which was at 650. And thanks to our media who hyped exorbitantly, we never enter into this trap. What is the reason? Our fund follow a philosophy known as intrinsic value. The history is witness. 2008, before 2008, that no asset class of the globe, I repeat, no asset class of the globe can run away from intrinsic value. Let's take an example today, crypto. Few days ago, Terra, which is a stable coin, collapsed. And when I did my research on Terra a few months ago, I was very clear that I'm not going to be investing in this, coin. Today, DEUS, another stable coin, collapsed. Guys, there is no asset class in the world which can run away from intrinsic value. But the biggest problem we have in the world is people do not know about intrinsic value. They hardly bother about intrinsic value. And this is one of the reasons why 99.99% investors lost in the markets, while 0.01% investors win. Example, Infosys is a profitable company, I agree. IT company, I agree. Cash-rich company, I agree. But these are not the only input parameters for intrinsic value. I'm sorry. Of course, if you are a loss-making company like Zomato, Policy Bazaar, Nikea, Car Trade, Paytm, then you are outrightly rejected from my fund. But yes, if you are Infosys, amongst the well-known IT company, profitable company, then that doesn't mean you are trading at 1900 and we would value you. No. Because your balance sheet do not support 1900. Probably a hype or maybe a one transaction or another transaction take you to 1900, but the balance sheet do not support 1900. So first we calculate the intrinsic value. And when we calculate the intrinsic value, now we have started calculating called intrinsic shock. But because the glaciers are melting, geopolitical events are happening, and there are so many factors which are going on. So we created our own methodology called intrinsic shock, which means assuming, I repeat, assuming the intrinsic value of Infosys is 1200. I repeat, assuming. Then shock means what would if intrinsic value shift to 10% up or 10% down. Because there are a hell lot of factors we have in the market who have the capability to shock the intrinsic value. And assuming Infosys comes at 1200, we will think whether this shock which we estimated in our Excel model is possible or not. If the probability of that shock is high, we will wait. But if the probability of that shock is low, we will go ahead. But unfortunately, 99.99% investors, I repeat, 99.99% investors do not aware about the intrinsic value. Forget the shock. The period in which we are heading is a very sophisticated period, which includes act of God, geopolitical issues, debt crash, and many such things. Investors are requested to be very, very careful. But common sense is, to be careful, you need to be highly, highly expert in the subject. And in the countries like India, people prefer to chase money than the expertise.